All right, and good morning. And it's been a long time, and now we're going to be on Rumble, right? We're going to be streaming to Rumble soon, but this is actually just going to be a recorded video. So today is October the 18th, 2020. So welcome to Theta Farm. Excuse my throat because I'm actually getting over a bit of a cold, so I might sound a little raspy. So what can you say? We are now powering higher today, up 67 handles on the ES, as you can see here. And across the board, equities are all strong. The Nasdaq's up 230, Russell's up 30 points, and if you do follow me, you do realize I don't really look at the Dow anyway because the Dow is actually just more of eye candy. But that in itself, I believe, is up. Was up like 300 or 400 points again today. I think the story overall, though, is that volatility has not budged. And I think that's what you really should be paying most of your attention to right now. And if you're really not getting any move, I mean, the moves that we've had in the last 2 days, you would expect volatility to be well below $30. And it's not. It's still hovering right around $31. In fact, it's only down about 75 cents. So literally no move. Those are the VIX futures. And you're not seeing any movement there. I mean, so it tells me that there's, a lot of monkey business going on right now, especially with the big time trading firms. They're playing games. Let's face it, they're playing games. And, there's a lot of positioning going on, and what you might be seeing is you maybe just be seeing a very, very massive short squeeze where they're just looking to liquidate their positions and then reload. And who knows, right, where this takes us. Is it the end of the bear market? I doubt it. And so anyway, there's a couple of things to look at. You also have bonds, which really have not rallied. You would expect if the market was going to rally overall that we'd have a bond market that would follow. Not the case. Pretty flat to down. And it's going to be awfully difficult for bonds to keep falling and the stock market go up. But although I think if you look back through history, there's been a number of times where the market has gone and bounced, where everything else economically has gone against it, right? And it's been turned out to be a dead cat bounce. It's a pretty big move, though. If you consider, here's the ES, and this is the daily. We'll look at the 4 hour. The 4 hour chart's always the best kind of one to give you a better feel of what's going on. I mean, in perspective, if you look at the move short term, yeah, it looks pretty good here. We're getting up to that 38 handle, but if you really think about it, it's really only getting us back literally to like the beginning of the month highs, which was about 3,800, which is direct as I speak. So there you have it on the ES. I mean, I would look out for some spots that I kind of like short here. I like 37.85, I'm going to set an alert here. I do like that spot. If we get up there, and I think the thing to consider as well is that we do have some earnings. And I think if the earnings are not as shitty as everyone is expecting them to be, then possibly, maybe that is kind of what the market's getting a little ahead of. I mean, Bank of America had some pretty good numbers. There's a couple other companies that reported yesterday. I have to go and look. But, they actually reported pretty well. And in fact, if you looked in the numbers of Bank of America, and I thought this was pretty interesting. I wish I would have saved the stat. But something like over 85% of people with outstanding loans, whether they're equity loans, first time homes, car loans, blah, blah, blah. Average score, like FICO score, was like 750, which I'm finding very hard to believe. Maybe when they filed for the loan, their FICO score was 750, which that I can understand, right? Because like what happens is you go for a loan, right? You have a good FICO score, and then after you get the loan, that's usually when your credit shits the bed. But I thought that was very interesting, and that's kind of an anomaly, I think, a bit here. So we'll see what happens. But that was actually good news. So it kind of shows that they're giving out stronger loans than they did before. But again, most people don't go into the bank with a shitty FICO score in the first place. That's, most people go into the bank, you have a good FICO score, then you get your loan, and then you default on it, and then that's when your loan or your FICO score blows up. So anyway, that's kind of the story there, and that's kind of, I think, a little bit of what's been carrying a lot of these equities. I am going to put up the financials here real quick, and I think those actually started running last week before all this. That the financials were showing a little bit of little strength, and they did kind of where are they? Financials. There you go. And there's your financials, and we'll look at the XLF. Where the hell is the XLF? There it is, XLF. And then, you look at this, and this is on a 4-hour chart, and you do see a bit of, bottom in here. Could it be the bottom? I don't know. Who the hell knows, right? If I knew, I'd be sitting on a beach in Fiji, drinking out of a pineapple. But I'm not. I'm here in my freaking bedroom on my standing desk that I bought on Amazon, and I feel so millennial. So that is kind of the story there with the financials. They do appear to be kind of leading things here, and I see this, and is this a bottom? I don't know, but it's duly noted. I think you need to note that maybe is probably a spot in the sand that you would need to mark somewhere in the 30s on the XLF. It's about 30, 36. And is it truly a breakout? We're going to need to get past a couple of these. You see these high volume nodes here on the side, right? If you're looking at sectors, there is going to be a little, there are going to be some hurdles here for this to get through. And so first spot's going to be 33.44 coming up first. After that's going to be 34.22. And then last but not least, at 35, a move over 35. I'm actually going to create an alert for that. A move over 35 to me would mark possibly, and then I say a lot of people will say, well, by that time, you're too late. Remember, honestly, I'd rather be late to this rally than get sucked in like everybody did last time. Right? Remember the last time? Right? Back in August? It was over. It was over, and it wasn't over. It wasn't over. And the last time before that, right? And the last time before that, it wasn't over. It's not, you don't know. I'd rather be late to these things. Because let's face it, when it's going to go, this is going to go to 38. And so is it really that big of a difference? If I got in at 32, then at 35, obviously 32 and a half or 33, from 35 to 38, much bigger move anyway, right? And more, as I should say, a more confident move. I have more confidence in the move at that point, that there's some strength back here. So anyway, before we get here, there's going to be nothing but, to me, resistance. And that's pretty much at play at all the financials. I'm going to go through a couple of them through the board here. Right, and you got JP Morgan, and JP Morgan is another one. It's about the same, it's not the same price, but about the same level. You can see the patterns on all these are all pretty much carbon copies of each other. They're all carbon copies. So if you're a pattern trader and you're trading these patterns, you're not going to tell me that you had the foresight to come down here and you were buying this at $100. I mean, if you're going to tell me you were buying JP Morgan at $100, you're full of shit, right? You're full of shit. I don't care. There was nobody I was watching, even on Twitter or anywhere else. Nobody was buying JP Morgan at $100 saying, yeah, it's going back up. Nobody was. Not even Dan Nile. None of the clowns on CNBC. None of them. They were all saying, well, in the long term, and then 20 points later, 18 points later, now here we are. I do think that JP Morgan's going to get some resistance again in the same areas as we've seen with the XLF, because that's just what it is. So anyway, there you have it. A little ramble there, but just the financials, I think, are market. You do need to keep your eye on those as a trader to kind of see if they're going to be sustained here, because these have. If you just look at the charts on these, and let's just take Square, which is a little less more of a financial, more like fintech. These have not really recovered at all, and kind of led to a lot of the downturns in the financials. You got the Squares, the PayPals. They just did not recover and have not recovered the way the other. And it kind of can be a tell, because a lot of these big banks have agreements with these companies, whether you like it or not. So anyway, these have not recovered. So that could be kind of a tell that this is a little short-lived. So anyway, there you have it. And then I don't want to be a total wonk here and just sit here and just go, and I'd like to talk about some trades that I do like that are on the table here for this week. So let's look at, I had a bunch of alerts fire off last night. Let's just take a look at some earnings, because I think that's going to be, there's some really good ones. Can I do this? I'll have to pull the Discord over. Let's see. Yeah, I'm going to have to pull this Discord over. Ugh, come on. My God, Discord lately is just a piece of crap. I can't do that. What a broadcast. What a broadcast. Okay, here we go. All right, here we go. There we go. All right, so Netflix tonight. So we're definitely going to do Netflix. We'll talk about Netflix. This morning, I didn't really do any of these, although they looked interesting as far as like Goldman Sachs, Johnson & Johnson. I just didn't, they just really, there was really no volatility there, or really nothing to do. But Netflix is interesting, and let's just make a note of those, and we'll take a look. And so Netflix for tonight, we're definitely going to do Netflix. And Netflix is always fun to trade for earnings. But problem's going to Netflix, just right out of the gate, just going to tell you this right off the bat, is the problem with Netflix is going to be margin. Margin's going to suck. Because margin always sucks in Netflix. It just never fails. So, all right. So, we got Netflix. FLC. I am writing it down. See? This is the new way to do it. You just don't use a piece of paper. Don't use a piece of paper. Don't use a piece of paper. Use your iPad with your smeary fingers all over it. Yeah, it's real sanitary. United Airlines, UAL, that one probably be pretty interesting. That's usually pretty good. And so to set up for today, if we're going to do anything tomorrow morning, we're going to have to do it tonight. Procter & Gamble looks interesting only because of the name, and it has had some pretty decent volatility in it. Abbott, probably not so much. Baker Hughes probably sucks. And most of these others kind of probably blow, like Winnebago, not that the companies themselves blow, but as far as like trading their earnings, is going to suck. And then Wednesday night, so tomorrow's broadcast is actually going to be a real lot of fun because we're going to have Tesla, IBM, Alcoa, Las Vegas Sands, And then the next day, on Thursday, we're going to have American Airlines, and at least some of those. AT&T is going to be a piece of shit. But those are actually some pretty good ones to play on earnings. So for today, it's just the three. So let's look at the three. We got Netflix. We got Netflix, and so let's put up Netflix, NFLX. So Netflix, let's just look at the overall schematics of Netflix. Relatively good liquidity. It's not great. Let's face it. It's okay. And they do report after the close today, and you can see those. That's where it's been at. It's actually been on a little bit of a run here with the rest of the market. And so let's take a look. So now with these earnings trades, we normally like to look at least, 30 to 45 days. You can do the options expire Friday. I wouldn't recommend it. I usually like to stick to and give myself a little bit of time. Expected move out in November is 40 cents or $40. I'll be all right. $40. That brings us down to the 200 strike and all the way up to the 290 strike. All right, so but Netflix is up almost $4 today out of the gate, so that may skew this. So there is your expected move strangle. Okay, which brings you at about a, let's see, is about a 15 delta on the bottom side. We got to get the pen tool. Where's the pen tool? You got to have the pen tool. Where the fuck's the pen tool? Where's the pen tool? Where's the pen tool? See, I'm not prepared. Hey, I'm trying, man. I'm back, though. I'm back. All right, there's the pen tool. There it is. Pen tool. All right, right here. So you're looking at about a 15 delta. There's a delta. All right, you're looking at a 15 delta on the put side. This is actually playing the pure expected move in November, right? $40. It's almost $41. Brings us down to the 200 strike put, which is bid at 590. And then it brings us up to the 290 call. All right, and that is about a 27 delta. All right, so now if you're going to play this, as I said, buying power on this. Now, if you're going to do this, this is actually the trade to do. If you have the capital, right? More than likely, I'm probably going to do this. It's a $2,400 hit on your buying power. I get it, but your max profit is $1,295, and you have almost probably a profit of 70%. So a 70% pop on this, and a 86% probability to make 50% of max profit, which puts you down at about $8 or so, or six and a half, almost $7 a profit, $700 worth of profit. Not too bad. And then, overall, even though the delta is showing here, it's kind of skewed bearish, right? Because of the delta being negative 12, for the most part, it's a pretty neutral trade. Now, if you want to actually get the delta more in line, you would just bring this call up. And you can see if I start moving this call up, and if I move it all the way up to the 1 standard deviation, which is a 305, you can see my delta is relatively flat at 4. And hence, on the other side here, if I pull this down to the 1 standard deviation move, you can see it actually increased my delta to negative again. Right, so there is a little bit of call skew, put skew in here, in that the, is it put skew? Let me see, before I talk out of my ass. Let's see, here's the 50. Yeah, there's an enormous amount. And how do I know if there's put skew or not? You basically take the equal delta options on both sides. So this happens to be the 50 delta options on both sides. you can see the 50 delta, the negative 50 deltas are bid at 26. The positive 50s are bid at 17. So there's an enormous amount of put skew on this. So you're definitely getting paid for selling some of those puts. So excuse me. Wow. So anyway, there's kind of step one. The trade that I would probably most likely do, though, is I would stick within the expected move here. Right here's what it looks like on the curve. I know I kind of got off the reservation a little bit, but there you have it on this. So it's the 200, 290 strangle. It's going to run you $2,500 in capital. It is what it is. Netflix has always been a pig as far as margin, so there's nothing you can do about that. So now always comes the question, well, I don't really have the capital. Well, it's not a big deal. If you don't have the capital and you're looking to put on a little bit more risk, then cover your trade. So you go out and buy the 30. So you're doing a 10 wide to 290, 300. And then you're going to cover this on the downside. You're going to do a 190. Now, what is that going to do? You can see that your buying power literally just got chopped by a third, if not more, right? I'm not a perfect mathematician, but it's about a third. And actually, it's a lot more than a third. But anyway, your buying power is now $600. The reality of it is, max profit's $345. You almost have a delta neutral trade. And this is an iron condor, but a little wider iron condor. Delta neutral trade. You have pretty decent theta here, and you're still in a trade that's got a 60% probability of profit. And you have an almost 70% probability to make 50% of max profit. So there's kind of step one if you don't have the capital to do the strangle, the $2,500. This is option one, and you want to take on a little bit more risk, right? So what you're looking for here is you're looking for this volatility, this IB rank, this 81.3. After earnings, right, it's kind of like the orgasm, right? That volatility should contract and kind of fall in on itself like a black hole, and you will gain money by premium kind of getting washed out after the event. And of course, you'd want it to actually land in that area, right? You're going to want it to land in here. Where's my box tool? There it is. You're going to want to have this land in here, in this range. So you're looking at anything, upwards near 290 and not go down any further than $200. So, but Netflix been known to move. Netflix been known to blow it out on the upside and, blow up on the downside. And recently, Netflix has really been blowing up on the downside. In the last earnings cycle, I mean, I got kind of wrecked short term, pretty bad. I mean, we were down, I think it went down like $150. It just got annihilated. So that shit can happen. But with this is it. This is what it is, right? I mean, your max loss is your max loss. There's nothing, those are the numbers. It's a risk-defying trade, so it's not like you're getting into something that's not. And then if you want to take on a little bit less risk, then just tighten this up. And if you're going to tighten this up, I would stick at this 300. I would just make these 5 wide on each side. So now you're doing a 190, 195, a 295, 300. You're bringing in $1.60 or $160. Your buying power is only $300, right? So you could do this trade in just about any account you want. Theta numbers are never great in an iron condor anyway, but those are pretty decent. And then as far as delta is concerned, you are in pretty much a delta neutral trade. So you don't give a flip about where the price is as long as it's between 195 for the most part and 295. You're a winner. And you got 30 days for it to land in there. So, right, so there's the 3 options. You got the strangle, you got the wider iron condor, and you have the more traditional iron condor, all of which, can fit anyone's risk profile. All right, so there's Netflix, and that's what I'd be looking to do in Netflix. So now let's look at United Airlines, right? And I call it ununited because let's face it, it's United. It's United because it bought a bunch of shitty airlines. But let's look at UAL. And this one's always fun to trade because the margins are usually really good. I mean, here I'm doing a naked put. I'm selling a 30 naked put. First of all, expected move is $5 out in November. That's a pretty big move for, a $36 stock. That's a pretty big move. Volatility is pretty good. It's pretty good. But seeing, I don't know if I'd want to be completely delta neutral in United Airlines, only because when I look at the chart, let's just look at the chart on, and this is where your charting comes in. Do I want to be completely delta neutral in here? Seeing that this thing has, for the most part, been nothing. It's been an absolute slob. Let's face it. And if it pretty much breaks down here below 30, if it breaks down below 30, all bets are off. Chances are it's going back to 20, right? It just probably get massacred. Do I think that's going to happen? Obviously, I don't. But so one trade that I would prefer to do rather than do so let's just look at let's do it. The expected move strangle would be a 30.42. This is a really nice trade right out of the gate. You're within this expected move. You're bringing in you could probably do this for $1.60. I would try to force a few pennies out. But the expected move strangle is only going to use $300 of capital. Give you a little bit of skew, delta negative here. Okay, theta, not great, but 70% probability of profit. And this is what this one looks like. Again, I'm not crazy about this trade only because I just don't like the fact that I would prefer to be a little more directional on a United Airlines play. And the reason is because the thing's gotten beat up. Let's face it, it's gotten the snot beat out of it. If they decide to beat it up again, okay. Again, I don't know what the hell's going to happen with earnings, but this trade's just not as interesting to me because it lacks a little bit of the directional play. Because I'd want to play this. I'd probably looking to play this a little bullish. In fact, and so the way I would do this, I would still sell the 42 up here. In fact, here's what I would like to do instead of doing this. So this would be kind of your at the money strangle here. I would sell the 40 call, and then I would kind of get directional here by doing a ratio. And then, my feeling would be hey, look, I want to get a little bullish in here, but I don't want to kind of go over the edge. But I want to have a little bit of downside protection in here because I'm going to take on a little more buying. You can see the buying power. So what I'm going to do here is I'm going to sell. So instead of this, I'm going to do this. I'm going to sell 2 30s. Let's see if I can do this. And this is a little weird trade. I don't even know if it does even have a name. I don't think I have a name for it. So I'm going to sell. So basically it's a ratio trade. So it's a ratio trade and I'm selling an upside call. I don't know what you want to call it. Maybe I should name it something. I don't know. Call it a chameleon. I don't know. I'll come up with a name for it. It doesn't really matter. But the fact is, this is the kind of trade that I'm looking to get in UAL. Now, although the delta is pretty heavy negative, what I'm looking to do here is I'm kind of double downing here a little bit on the put side. So I'm selling 2 30s. I'm buying 130, but I'm also selling an upside call. But you see, I didn't do anything. My margin. Right? That's what I love about this stock. So this would be the trade that I'd be looking to do. And this is what this one looks on the curve. This is going to be a weird looking one here. Because when you do the analysis, you're going to get this band, right? See how you get this So basically the wheelhouse for this trade is basically at my short strike of 30. So basically I'm building in a lot of downside protection in this, even though, I mean, on the surface, this appears to be bullish. I mean, my delta is pretty heavy negative because of this 40 call that I've pulled way down here. But it's kind of getting offset a little bit by this. But this is the kind of trade that I like to do in UAL. I mean, this is what I would be looking to do. So I'm going to sell 230 puts. I'm going to buy 131 put. And I'm going to sell a 40 call against it. All right. And that 40 call has a pretty high delta. It's a 36 delta. And I'm going to be selling, the less than 20 deltas puts down here. And as you can see, it's still giving me a pretty good band, basically from about $27 all the way up to almost $41 where I can be profitable. And I'm not using hardly any money. And it's almost about a 50-50 take, right? I'm going to use 380. My max profit's 286. I'm on almost 70% probability of profit, 84% probability to make 50% of max profit. And so there's UAL. That's kind of the trade that I like. But the beauty of this one is that you can do whatever you want in here. It's open season, and it's because the margins are great. You don't have to worry about liquidity. Look at the open interest, right? All the food groups are represented there, so that's going to be a good one to trade. So there's UAL. Now, Procter and Gamble. This is going to be another one though that kind of sucks because usually the margins suck in Procter and Gamble. So you got an IV rank of 77. Overall, this is not the most liquid of. You can see here, it only gets like a 3.5 star liquidity. It's never usually a great liquidity trade. It does tend to be light. You only got a $7 expected move here. The only thing you're really going to be able to do in Procter, in my opinion, is it's going to be tough to be short in Procter. But if you're going to do the at the money strangle, that's what you're going to have to do, and I just don't like it. On a $7 move, you're going to have to be pretty much at 115, 140. You're only bringing in $188, and you're using $1,300 worth of buying power. All right, granted, you have a 74% probability of profit. To me, that's just not. It's not my wheelhouse. Not at all in my wheelhouse. Now, the trade that I would prefer to do is just do a straight ratio in here, because of where the stock is, right? It's gotten beat up. It's a staple. I don't expect the earnings to be so miserable here where I could see it being, annihilated. It very well could. But to me, the trade to do here would be something like this, where it's just a straight out ratio. I'm going to use 1,400 worth of buying power. My max profit's 538. And it's one of those where, hey, look, if it does get blown up and I get assigned, I'm only going to be short one put. I could live with getting assigned 100 shares at 115 on Procter & Gamble. I don't know about you, but hey, if they want to assign me at 115 on Procter & Gamble, I'll take that all day. And so that's really the only trade that I see kind of even workable here on PG. Other than that, in this, I would try and do it for 40 cents. All right, and that's kind of it as far as earnings. All right, so we got Procter and Gamble, we got Netflix, and we got UAL, and went over a lot of different things. So, I'm going to post it up. Let me know what you think. And welcome aboard on Rumble. And hopefully I need to get 100 followers on Rumble in order to start streaming live, and then I'll start doing these live. But thanks. Appreciate it.